afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Thursday. The main index once again closing in on the 7,000 level as it inches higher today. Shares are up 0.7% to 6,903.75. Share price is expected to get a major boost with the impending passage of CREATE. That, of course, has been ratified by both houses of Congress yesterday. The bill, which would slash corporate income taxes, is now up for the president's signature. You have Jackie De Jesus of Maybank, ATR Kim Eng saying, that this measure is the biggest catalyst for local stocks this year, especially with key provisions still intact in the approved version. The stockbroker sees a PSEI getting a lift to 8,056 from their initial 7,650 projection due to CREATE's expected passage. They expect some stocks to benefit more than others. Top picks actually include All Home, RLC or Robinson's Land, and Century Pacific Foods. The stockbroker also sees telco giants PLDT and Globe having the most savings due to CREATE, considering that their operations are mostly local and they lack tax incentives. But definitely loads of economic developments to be keeping track of other than CREATE. For one, you have NEDA recalibrating its development goals for the country. They're not keen anymore and an 8 to 10% GDP forecast for 2020, like what was announced back in December. That has been revised to 6.5 to 7.5%. But Undersecretary Rosemary De Leon says that can still be surpassed. They have also slashed their poverty reduction target here from 14% previously. That has been revised to 15.5 to 17.5% in 2022. They're also setting their sights on unemployment rate of 7 to 9% until next year. That's a big departure from its previous target of 3 to 5% by 2022. Undersecretary De Leon admits that it's still going to be a difficult market here for the labor force, but not all hope is lost. The agency expects a big batch of workers to actually come in next year, as a first batch of K-12 students is expected to actually end schooling by 2022. Now, latest PSA data also shows, of course, unemployment easing in October to 8.7% from 10% in July, and of course, that peak that we saw in April of last year. Now, we'll discuss more of this later with Action for Economic Reforms, AJ Montesa. But for now, more of the markets, starting off with the property counter. That's after KMC Savills reported that prime office vacancy in NCR may actually climb to 12% due to an additional 1.1 million square meters of new workspace already in the pipeline. Add to that the effects of online casinos exiting the country. But looking at how the sector is performing, seems to be at least unaffected by that potential exodus here. It has snapped a two-day treat, advancing 0.5%. Despite that bit of news here, looking at some of the major players here, especially those in office spaces, the likes of Mega World, Ayala Land, and SM Prime, of course, ending the day in the green here. Mega World is up over 8%. SM Prime likewise also edging higher by 0.9%. And then from property, let's head over to some of our banks here, over to the financial sector. That as December loans dropped by 0.7%, dipping for the first time since 2006. But the drop notwithstanding here, the gauge climbs with the rest of the index. It is up 0.4%. Some of our biggest banks here, BDO edging higher by 1.25%. Metro Bank also surging 1.2%. BPI, on the other hand, still in the positive territory here, up by 0.25%. Now, here are other headlines we're keeping our eyes on. Global banks' credit losses are expected to hit more than $900 billion this year due to pandemic-related defaults. That's according to S&P Global Ratings. Philippine Star reports that the Debt Watcher sees credit losses that are 1.9% higher than last year's $892 billion. Last year's figure soared 64% from 2019, ending a multi-year period or benign credit losses for global banks. The credit rater sees losses that are lower than previously forecasted in North America, China, and the rest of Asia Pacific. For 2022, S&P sees credit losses still above pre-pandemic levels at $867 billion. The group says the pandemic and country's response to it would have long-lasting effects on bank asset quality. Now, the Philippines is set to receive a total of 44 million doses of COVID-19 vaccines this year under the COVAX facility of the World Health Organization. This includes a first batch of up to 9 million doses that's expected to arrive within the first and second quarter. The WHO says they are just waiting for the country to fulfill necessary requirements prior to delivery of the vaccines from Pfizer and AstraZeneca. The health department has been inspecting several cold storage facilities where the vaccines will be stored. More than 100,000 doses of Pfizer vaccines are expected to arrive in the country this month. The government, meanwhile, is awaiting emergency use listing for AstraZeneca, which is a requirement prior to delivery under the COVAX facility. Now, circling back to one of our major stories today, the government has revisited its growth targets for 2022, now expecting growth to come in lower at 6.5 to 7.5% next year. To talk about that and other developments on the economic front, we have AJ Montesa, Research Associate at Action for Economic Reforms. Good afternoon, AJ.
Hi, good afternoon, Jess. Good afternoon, everyone.
All right, so your thoughts first on the new growth targets here presented by NEDA a few hours ago. Would you say, of course, is this more achievable than previous goals? De Leon says it can be surpassed. How likely is that?
Well, I think I agree with NEDA's general sentiment that the worst is over in terms of the country's contraction. So I think that's what NEDA's been pointing to. We're observing at least improving growth trajectory, improving unemployment situation, and a stable inflation. So there is room for us to improve on that forecast. I think they're just trying to be as modest as possible. However, I also think that we observe that many institutions are forecasting that the Philippines is relatively behind compared to our ASEAN neighbors as regards our COVID response and macroeconomic recovery. So there is still some uncertainty as long as we are not yet sure how quickly the government can distribute the vaccines, for example. But it is strengthened. Our growth prospects are strengthened by the passage of stimulus and economic recovery bills. And I think one factor there is the passage of the CREATE bill, which will lower the corporate income tax and be a benefit for many small businesses.
Okay, so we touched on a number of points already that we would discuss during this interview. But first, I want to focus here on, you did say, of course, that NEDA might just be, at this stage, being modest, at least with their projections. Given that, where do you see growth actually parking this year and next?
There's still a lot of uncertainty, so it's hard to pinpoint an exact figure. But I think NEDA has laid out very conservative targets. Again, if we want to achieve a pre-COVID level of GDP, we would have to achieve a growth of around 10%. And I think NEDA is foreseeing that we won't be at that level until probably 2023. So I think 6.5 to 7.5% is a modest and reasonable estimate or forecast for our growth for this year.
Okay, one other interesting, at least in the figures that they released earlier, they've also updated their unemployment target. They're seeing it parking around 7 to 9% next year. That's a departure from the 3.5%, 3 to 5% previously. Would you say it's still going to be a long road to recovery for the labor market?
Yes, I would tend to think that there's still a long road to recovery because a lot of our economy depends on the service sector, especially face-to-face services, restaurants, for example. So those things, they are under a lot of uncertainty because we're not yet sure how soon quarantines will be fully lifted. Even though, practically speaking, most of the quarantine restrictions have been eased up. But nominally speaking, there's still uncertainty over how long, and every month that passes by, there's still a possibility that the quarantine restrictions will be tightened a little more.
Okay, but one major, a lot of analysts and economists are saying, much of the recovery would really hinge on the vaccine rollout in the program. But with the pace things are going, how are you seeing things moving forward?
Yes, that's actually one major factor as well, the vaccine rollout, because we wouldn't have to rely so much on quarantines if we can quickly roll out the vaccines. But
Mhm.
as regards the ability of our government to roll it out, I'm not as optimistic. The target is actually that we would achieve herd immunity in 2 years' time. So that's not quick enough for us to accelerate our growth to a 10% figure by this year or even the year after.
Would then that worsen our position in the region?
Yes, I think at the moment where we stand right now, we are still falling behind in terms of our position in the region.
Mhm, mhm. Okay, one other thing that you mentioned earlier, of course, create that's well, at least a number of economies are is at least a number of them expecting that to be a stimulus here for the economy. That is already just awaiting, of course, the president's signature. How satisfied are you with the final form?
Yes, actually, we're very satisfied with the passage of Create in principle because Create is not just it's not supposed to be seen as just a stimulus law. It's a structural reform that we've been trying to get passed for the past few decades now, and it's part
Mhm.
of a larger tax reform program of the government. So it's a good signal for our creditors, and it allows us to have better credit access. So that's good as part of our COVID stimulus effort, right? But in terms of providing relief for small businesses, also that's a good thing because it reduces the tax rate from 30% to 25%, and for what would be considered small businesses, it's even lower to 20%. However, we do have some concerns as regards several insertions. Um,
Mhm.
for example, we feel that there are three main provisions that might run contrary to the main objective. So, number one, there is an exemption on taxes and duties for petroleum refineries. Number
Mhm.
two, there is a VAT exemption for legislative franchise on housing, for example. And number three, there is concern over the FIRB's jurisdiction. So we feel that the main principle of the reform is really to strengthen and rationalize our fiscal incentives, and those three provisions might run contrary to those.
Or would you say that this is something that the president would actually look into, or at least would do you expect a vetoing of some of these provisions?
Yes, actually, we're calling for the president to re-examine these provisions and do a line item veto on these provisions.
All right. Thank you very much for your time this afternoon. Of course, again, create just awaiting the president's signature. Let's see, of course, if he is going to veto some line items from the measure. Thank you very much for your time this afternoon. AJ Montesa, Research Associate at Action for Economic Reforms.
Thanks, Jess. Good afternoon.
And that has been your look at the trading day this Thursday, February 4, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.